Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within corporate filings. And today we're diving deep into REINSURANCE Group of America's latest annual report. Get ready for some numbers that will tell a story. And trust me, this story is packed with more twists than a daytime soap opera. So buckle up because we're about to decode RGA. And hey, before we get started, if you love getting the real story behind companies and want to stay ahead of the financial curve, make sure you subscribe. We're building a fantastic community for dissecting these filings, and you can join the conversation on our Discord server linked right in the description below. Alright, we are looking at REINSURANCE Group of America's big annual report for 2025. This is where they lay it all out, from their business operations to the nitty-gritty financials. Let's start with the top line, the money coming in. Their net premiums were just over $17 billion in 2025. That is down a bit from 2024's nearly $18 billion. It sounds like a lot, but for a company that deals in reinsurance, it is all about managing risk on a massive scale. But here is where things get really interesting. Their net investment income jumped significantly from about $4.4 billion in 2024 to a whopping $5.8 billion in 2025. That is a huge increase, showing they're making smarter money on their money. And look at this shift, investment-related losses, which were a hefty $745 million in 2024, turned into a gain of $245 million in 2025. That is a swing of over $1 billion. They clearly got much better at managing their investments, or perhaps the market just turned in their favor. All this translates to a much healthier bottom line. Net income for RGA shareholders hit $1.18 billion in 2025, a big jump from $717 million in 2024. That is a massive improvement. And for us shareholders, that is reflected in the earnings per share. Basic earnings per share went from just under $11 in 2024 to almost $18 in 2025. That is a solid gain. Now let's break down where this success is coming from. The US and Latin America operations show a slight dip in total segment revenues, mainly because of fewer big annuity deals in 2025 compared to 2024. However, their adjusted operating income before taxes in this segment actually grew because of a big reinsurance deal they did with Equitable Holdings in July 2025. This deal alone added $68 million to their income. It seems they're getting more efficient even as some revenue streams shift. Over in Europe, the Middle East and Africa, the traditional reinsurance business saw a boost in net premiums thanks to more business overall. But dig a little deeper, and you see their adjusted operating income before taxes actually went down. Why? A big reason was an adjustment in their actuarial assumptions, particularly in the UK, which led to what they call a future policy benefits remeasurement loss. Essentially, they had to set aside more money for future claims than they initially expected, and that hit their current earnings. In the Asia-Pacific region, the traditional business is growing steadily, with net premiums up and a future policy benefits remeasurement gain, which is good news. It suggests their long-term bets in that region are paying off better than expected. But no company is without its risks. Let's talk about what keeps RGA up at night. They're heavily dependent on their pricing assumptions for things like mortality, morbidity, and investment returns. If actual experience differs significantly from these assumptions, it can really hurt their profits. And then there is the ever-present specter of pandemics. They explicitly state that epidemics and pandemics can seriously impact their business because they directly affect mortality and morbidity rates. This is a reminder that even in the reinsurance world, global health events are a major concern. Another big one is their credit ratings. A downgrade in their ratings or those of their subsidiaries could make it harder and more expensive to do business, affecting their ability to compete and raise capital. This is why maintaining strong financial health is so crucial for them. They also highlight risks around collateral requirements and the use of captive insurance companies. This is a technical but important point they make, suggesting that regulatory shifts or the cost of collateral could impact their financial flexibility. When we look at their finances, their liquidity position, which is basically their readily available cash, grew significantly. It increased from $3.7 billion in 2024 to $4.5 billion in 2025. This is a good sign, meaning they have a healthy cushion to cover unexpected needs. Shareholders should be happy to see their dividends paid out increase from $229 million in 2024 to $240 million in 2025, showing a commitment to returning value. Looking at the segments, the US and Latin America operations had total segment revenues of over $12 billion, while Canada brought in nearly $2 billion Europe. The Middle East and Africa generated over $3.8 billion, and Asia Pacific added another $5.1 billion. These numbers show a truly global reach. So what is the final verdict on RGA? They've had a strong year, particularly in 2025. with net income available to shareholders soaring to over $1.1 billion. They're navigating complex risks like assumption updates and market volatility quite effectively. especially with that big win from the Equitable Holdings deal, helping to boost their financial solutions segment. Their investment income is up and their losses are down, and that is a recipe for a healthy profit. While risks like pandemics and regulatory changes are always on the horizon, their solid liquidity and capital position suggest they are well prepared. RGA is a major player in the reinsurance world, and this report shows they are managing their business strategically, focusing on both innovation and financial prudence. That's our deep dive into Reinsurance Group of America's latest annual report. What did you think of these numbers and their strategic moves? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and remember to subscribe so you don't miss our next corporate investigation. And don't forget to hop over to our Discord community linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.